Then for the ASX 200 at the Open, we're joined now by Stan Shamu from IG in Melbourne. Stan, what do you think?
Morning, Brady. Yeah, absolutely. It looks like it'll be a relatively flat to slightly higher open. We are currently calling the market up 0.1% at 51.23, so there's nothing much in it. Of course, there's a lot of event risk for the local market this week, as well as that bank holiday for New South Wales today, which would probably see volume limited to some extent today. Of course, we do have quite a few earnings as well starting to kick off this week, with the likes of Telstra, Cochlear set to hit the wires, along with Rio Tinto as well. So that should have a pretty big influence on their various sectors, and of course that should have a bit of a bearing on how the market trades this week. But of course we've got retail sales out at 11:30, a 0.4% rise is expected, and that should continue to see the Aussie dollar see some volatility, and of course a little bit of repricing on the interest rates front. But of course at the moment it looks like the market's firmly looking at a cut. I think the market's pricing in about a 91% chance for cut tomorrow, with 26 out of 27 economists also calling for a cut tomorrow. So by all means, it certainly looks like the statement will carry a lot more weight. But of course today we are likely to see a bit of a holding pattern at the open, see investors relatively cautious about the week's events for the Aussie dollar and the local market as well. Of course we've got elections have been called, and that should cause a little bit of volatility for some stocks, particularly in the media sector. Stocks like Fairfax, which have been starting to pick up a little bit, it might get back above that 50-cent mark and possibly trade back towards that 55 cents in the short term. We've got gold names likely to bounce back a bit after gold regained ground, with the US dollar losing ground after non-farm payrolls disappointed on Friday. So there's a little bit to look out for. Not too much on the company news front, but mostly macro driven for the beginning of the week.
So in terms of the levels on the Aussie, then what are you watching in particular? Because we've had some commentators saying that you should just be careful, given the 4% fall it saw just last week, that there could be a slight rebound on the Aussie, depending on what we hear from the RBA.
Yeah, there is a possibility of a squeeze higher. Of course, we've got a 91% chance of a cut already priced in. So, like I was saying before, what will probably make the difference is the statement, and of course whether or not the RBA feels this is enough for now, and they have to just wait and see how things progress before they decide to cut to make another move lower. And of course that might see them on hold for a lot longer than what the market was expecting. I think the next metric to actually look out for is the chances for a second cut before the end of the year, of which a growing number of analysts are starting to call for another cut before the end of the year. Now, if that percentage changes, then that's when we might see a lot more volatility in the Aussie dollar. And of course, if it looks like they might be on hold for longer, we might actually see that squeeze higher. We are eyeing that low from Friday, which is about 88.7 in the short term. Now, that might be the source of a bounce in the short term, and potentially we will remain contained by that 90-cent level, where a lot of traders will be looking to sell still. Price action is king in this environment, where the cuts are mostly priced in, and that's exactly what we need to look out for, just some of these key resistance and support levels. If we do break 88.7, then we are looking at August lows, which is in the sort of 87.7 level, ahead of 85.7, which was the lows from February 2010.
Just to the greenback then, because I wanted to ask you what you thought of the non-farm payrolls, because John Noonan from Thomson Reuters earlier was saying he felt there's been a shift in expectations now, that tapering's been pushed back after that data. What do you think?
Yeah, there have been a growing number of analysts thinking that perhaps September is a little bit too optimistic. And I think December is where some analysts are actually looking at, of course, and even later than that now, of course, with employment growth particularly showing signs of slowing, then that will be a big concern for the Fed. Of course, unemployment came down to 7.4%, but that massive disappointment in non-farm payrolls really set the tone for the US dollar. I think we've got a raft of Fed members set to come out this week, and of course they generally dictate how the greenback trades after the Fed minutes. So it will be a situation where we'll see big reactions to some of the comments out of Fed members. We've got Fisher, for example, on the wires. We've got Pianalto as well, and Evans set to hit the wires. So there's quite a bit to look out for in the US dollar front. Now the focus switches as well from manufacturing PMIs to services PMIs. So they don't generally carry as much weight as the manufacturing numbers, but that will still be enough to cause some volatility for the US dollar. And of course, across the rest of the risk space, I think that it will still be all about the Aussie dollar. I mean, apart from the rate decision, we also have, the unemployment or jobs numbers on Thursday set to hit the wires. And for Japan, we've got the BOJ out on Thursday as well. So it's not all about the US dollar. There's still quite a bit of event risk across the board.
Yeah, absolutely. Stan, as always, thanks so much.
Cheers.
Stan Shimmy there from IG. Coming up on First Business, Kevin Rudd kicking off the election campaign proper with a helping hand for the auto industry. More on this and Labor's economic statement up next.